what they offer beyond that 10% rate. In the meantime, all we've just laid out has the volatility index living up to its name. And it's not so much that it's jumping so high, because it was a lot higher. Right now, it's up about 6.8%. It had been up 11% earlier. Wall Street's fear gauge has been all over the map today. Let's get right to the floor show to figure out what's driving the action. Joining me now, BlackRock's Chief Investment and Portfolio Strategist, America's Gargi Chaudhuri. Gargi, let's just sort of pick apart everything that's being dumped on the markets right now. And it's not necessarily that negative, because if you look at the two-day pictures of the Dow, the S&P, and the NASDAQ, boy, it sure looks like this is a possible dip where people could get in and buy. How are you viewing it at BlackRock?
Good afternoon, Liz. It's great to be here. Thank you for having me. Dump of headlines is absolutely right. Obviously, a little bit of volatility, as you pointed out, today across the markets. But if you look at the broader picture, which is what we do in our 2026 Outlook investment directions, what we're seeing is growth still remaining significantly above potential. The Fed's still able to and willing to cut interest rates, especially with inflation moving lower. We saw that in CPI earlier in the week. And more importantly, earnings season, just at the start, it hasn't been spectacular, but we do expect over this quarter and the continuing quarter for the earnings to broaden out across different sectors of the market. All of that does bode well for broad equities, but also importantly, what we're seeing today that I'm very joyous about is hedges are working. On a day like today, bonds are working in your portfolio, gold is working in your portfolio. So if you have that diversified portfolio, it's working.
Gold and silver. Silver, once again, just defying gravity. We can punch up silver and gold, and you could see how impressive these moves are. Once again today, gold at 46.38 and silver at 92. Woo! Silver's just incredible. But again, when you're looking at the possibility of alternatives for people's stock holdings, how important is it now, and how do you view being more selective when it comes to riskier names?
Sure. So for people's stock holdings, look, for one of the big themes of 2025 and 2024 was AI. And we think that's definitely still a very important game in town, but thankfully not the only game in town. So AI is certainly going to drive markets. Obviously, a little bit of a weaker start to tech and some of the large cap names, but I think we're just in the beginning. We haven't even seen earnings season yet. Valuations here are important. If you look at where we started 2025 versus where we ended 2025, most large AI-related stocks are actually cheaper on a valuation basis because earnings growth has been so meaningfully strong. Our basket of about 46 AI names in the S&P 500 have had a net income of 30% versus 3% for the non-AI. So there is earnings growth there. However, I also want to say that we're beginning to see very good signs of broadening and rotation, which we think is healthy for the market.
Well, to that end,
focus on things like value, it makes a lot of sense.
To build out the diversity, and specifically, iShares has something called the iAlt. And that is a systematic alternatives ETF. We started digging into the biggest holdings there, and we found it really interesting to see that there's just a whole panoply of different things. T-bills, bonds, Amazon, Motorola, crude oil's in there, Siemens, some foreign names too. What does this capture for a portfolio that may have gotten just a little too heavy in tech?
Absolutely. And you make this great point around iAlt. And what it's meant to do is for those investors that are looking for alternative strategies that are just going to limit their market volatility. So if you're feeling a lot of pain from the markets going up and down and you want that more stable without, you want the returns, you still want to participate, but you don't necessarily want to have the beta of the equity markets. You do want to do that with some of these diversifying strategies, and now you have them in an ETF wrapper with the iAlt. And to your point, looking across both fixed income as well as equity markets without taking necessarily a directional view on the level of bond yields or the level of equity markets. In addition to sort of looking at IALT, which we're talking about in investment directions, we're also telling investors, think of some of the traditional alternative asset classes like IAU, which is, of course, the gold ETF that has received tremendous interest and inflow.
Really quick, we're looking at a Federal Reserve that at the moment, if you listen to all the Fed heads, there are about 4 or 5 of them, at least 4 of them, not Stephen Myron, one of the vice chairs, because he still wants much bigger rate cuts. But the others are saying, hold rates where they are. What are you at BlackRock expecting for the number of rate cuts this year?
Yeah, so looking at the macro backdrop, look, growth is expected to be a lot higher than potential level of growth, and that's a very good positive. And at the same time, inflation is coming down. I do think this is a really nice Goldilocks environment for the Fed to eventually be able to cut, but cut for the right reasons. They're going to cut because the level of interest rates needs to be closer to that neutral level of 3%. They don't need to cut because there's a fear or a shock of growth. So I think 2 cuts or so that starts maybe a little bit towards the second or third quarter of 2026 makes a lot of sense. They're not in any rush, and more importantly, they're going to cut for the right reasons. And I think this is an extremely important time to consider strategies that add income to your portfolio, because rates are still coming down. You still do need income, and the BlackRock Income Fund can do that for you.